So hello and welcome to a bonus episode of Engage with E-Commerce. After the last 3 months of running these webinars, we thought we'd run a special episode to kind of cap off this series. And what better way to doing so than welcoming Paul Martin from KPMG to join us today. Welcome, Paul, and a huge thank you for joining us.
Thank you for having me.
As always, I'm joined by my co-host, Heloise. Heloise, please just tell the audience a little about yourself.
Hi, my name's Heloise Finch. I run Sell Beyond. We are an Amazon-focused multilingual marketing agency. We help brands grow in English, French, German, Spanish, Dutch, and English.
Thank you. And Nathan Lomax here, Quickfire Digital. We're an e-commerce-focused digital transformation agency. We help clients maximize efficiency, profitability, and scalability through the use of tech. So for those of you that have been on the Engage with E-Commerce series that we've been running since really April time, we've been covering all sorts of different topics around retail, around the high street, and around how you can really get the most out of e-commerce. Today, we're going to sum up that series and kind of draw a line in the sand. This is the last one, and this is with Paul Martin, Head of Retail at KPMG. So we've prepared a series of questions for Paul, and we'll run through those. I hope you'll get as much value as possible. This will be pre-recorded, and it'll be launched as well to our audience. So Paul, let's get started. I appreciate you're incredibly busy. The conversations I'm having with retailers currently, they're all talking about this new dawn of retailing, if you like, after COVID. So as we ease out, everyone's looking at the long-term play, but I want to know from you, based on the conversations you've had, what do we think retailers need to focus on right now?
Look, it's a really good question, and the retail sector has had a very significant impact related to the health and now increasingly the economic crisis we are facing. And if we take a step back, the UK retail economy is a £395 billion economy, and we believe this year it will decrease by about 6%. But of course, we have got two halves here. We have essential retailing that has seen a significant surge in demand. That part of the retail economy will grow both this year and next year. Take food as an example. We believe that part of the market will grow by 6%. If I look at non-food though, and specifically the apparel space, this is where we're seeing some of the least performance happening at the moment. Women's wear, menswear, footwear, but also the beauty side of the health and beauty category has been very heavily impacted by the current circumstances. But going forward, and we've classified the COVID outbreak into sort of 4 key phases. You had the react phase, which generally started once lockdown measures were imposed, not just in the UK, but also in other markets around the world. We then moved into the resilience phase. So how could you trade in a lockdown environment? And then you moved, and this is where the UK is today, into recovery. But in that context, you then move into new reality. And the reality in this context is that recovery and new reality are happening in parallel. And many retail leaders are saying to me, we thought we had 2 to 5 years to transform our businesses. COVID has accelerated many of the trends that we have seen. Pre-COVID, we've probably got 12 to 24 months. And I would highlight 4 key themes in that context. The first theme is all around business model. The traditional retail business model is increasingly outdated. If you think for hundreds, if not thousands of years, the retail business was you source great product, you ship product, and you sell it. And if you're good at it, you open more stores. It's not as easy as that anymore. And going forward, organizations in the retail space are going to have to re-engineer that business model. In that context, the second key point is cost of doing business. Retail has for many years been a low margin business. In markets like the UK, increasingly we are moving towards a no margin business. So therefore re-engineering your cost base is becoming more and more important. In essential retail, even with the spike in demand, I still believe 10 to 20% of costs need to be taken off the cost base. And in non-essential retail, it is even more extreme. 20 to 50% of costs will need to be eradicated over the next 12 to 18 months. We then move into the purpose agenda. If you think back to the 08-09 financial crisis, pre that crisis, the sustainability agenda had gathered pace, but it fell off a cliff and broadly took 5 years to reappear. That's not going to happen this time. Purpose, sustainability, the broader ESG agenda is going to remain a top 3 board agenda. And the 4th key point is the customer. For many years, alongside the you source, you ship, and you sell great product, in parallel to that, you also had the sort of defined thinking. You have great product, you have a great location, you open the doors and they will come. Well, the reality today is if you do not know who she or he is, specifically competing against online and other growing channels, you have a significant disadvantage.
Wow, how's that a starter for 10?
And I mean, the statistics you've just come up there about the cost cutting, if that's the right word, on both essential and non-essential retail, that's pretty astounding. And based on those predictions, where can we expect to see retail heading? If you're taking away such baseline costs, what's going to have to change?
Well, let me just sort of answer the cost question first. And as you very rightly highlighted in that context, taking 20 to 50% of cost out is not tinkering around the edges. And look, I am a retailer by background, and the cost agenda has always been a key agenda for the retail sector over many years. And some retailers will tell you we've always been lean. Some will also say lean and mean is something that was part of our agenda. But tinkering around the edges is not going to be good enough going forward. And I would argue it's going to be 4 key areas that retailers are going to have to address when they're looking at costs. The first area is cost of goods. If we think of how significantly ranges have grown over recent years, and you go back to pre-COVID and you look at which types of retail businesses were successful, you had on the one extreme those offering unlimited ranges, mainly the platform ecosystems, and then those offering very curated limited ranges. That's where we saw the biggest success. Everybody in the middle that was trying to cater for unlimited on the one side, for limited and match prices on the limited ranges on the other side, felt it very difficult to compete. So going forward, I believe we will see range reductions of around 30% with most retailers, and that will improve working capital positions, it will improve supply chain efficiencies, it will enhance store operations if you think of replenishment, but if you also think of many organizations having a very large workforce dealing with a long tail of suppliers, that can be optimized. The second key area, and of course we've read an awful lot in the media about this, is real estate. I, as point number 1, believe that we have 25% too much retail real estate in the UK. I highlighted we need to reduce that by 2025. I think this will now happen by 2023. So that's going to be a key point. But the second point is also the rental business model. It's broadly governed by an act from 1954, so somewhat outdated, which guarantees broadly upward rental reviews every year. That is not in line with where the market is today anymore. Demand and the structure of retail has changed, so therefore the rental business model has to change. The rents to sales equation is completely out of kilter, and in some cases 30%. We often hear from a residential perspective in cities like London, the percentage of your salary you have to pay for rent just doesn't work anymore if you think of all of the other overhead costs you have got. So we will move away from quarterly rents paid in advance to monthly rents paid in arrears based on turnover, and 5 to 10% of turnover is the sort of general number I'm hearing from retail leaders from around the world. The big problem here, though, is there is a lack of trust between landlords and retailers today, and the policymaker, the regulators, are going to have to think how they intervene and bring those two cohorts together, as there's not just a danger for high streets in general losing their importance. If you think of where large proportions of our pension funds are invested, they're invested in real estate funds, so there is a ticking time bomb here. The third key sort of cost driver is around the workforce. Very emotional topic, I do appreciate that, but we are going to have to understand where does automation make sense versus the real human value add? And I still think the word selling has become a bit of a dirty word generally in society, but that's where the human adds real competitive advantage, specifically against the online channel. But also, if you think of supply chain distribution centers and health and safety aspects around carrying heavy boxes, etc., this is where automation in country make sense. And the fourth key area is around technology and supply chain. This is where we have to really understand the cost equation going forward. If you think of CapEx spend in retail over decades now, it has always been around stores, store openings and store refurbishment. That will have to pivot towards technology. If I take a very large global retailer, they spend 1.4% of their annual revenue on technology. Their single biggest competitor is a large platform business based out of Seattle who spends a significantly higher number. How do you compete?
Absolutely. I think that's so what it sounds like is that the conclusion we can have is a lot of the ways that will affect the cost reductions, the ways that will affect the customer experience is potentially in range reductions and potentially in the interactions with key salespeople. But actually what you're saying is the customer experience for retail, actually that's not where you can cut the costs here. Everything has to be in the back end to keep people engaged emotionally with buying in physical stores.
Yeah, it's a good point. And look, I mean, and that's where I make the link to the business model. I mean, in the UK, we have, after China and South Korea, we have the highest penetration of online. But I would argue the UK has built the most customer-friendly online business model, but the least profitable of anywhere in the world, because we basically give the customer broadly the largest possible choice at the cheapest possible price. So we do not charge for deliveries, we do not charge for returns, etc., etc. And this is where in the UK we're going to have to re-examine the business model. The problem is, how do you re-educate the consumer? And this is where technology increasingly is going to be important. You cannot pull the wool over the consumer's eye, but you're going to have to be smarter. And if you go back to the four sort of key trends I mentioned before, investing in consumer customer knowledge is going to be really key. Who are your most profitable customers? What do they really want from you? Who are your most notorious returners? Who are the people that are not at home when the grocery home delivery arrives, etc., etc.? Those are all things that you're going to have to answer without negatively impacting the perception of customer experience. You take France, for example, they're very big on click and drive. If I look at China, I look at the US, they have been much more further thinking from a profitability perspective. The UK is going to have to address that.
So Paul, I'd like to dive into a topic a little deeper, and that's a conversation I've been having recently around omnichannel versus multi-channel. We're seeing a huge shift towards omnichannel retailing as businesses start to create this kind of consistent proposition that's now channel agnostic. Do you think that this is the right way to go, and are you hearing the same, or actually is there still a place for multi-channel retailing?
It's another really good question, and I would probably take this a step further. I mean, if you think of the sort of 2010s, the single biggest debate was online versus offline, which sort of component is going to win. Now, the reality is that that train has left the station, that ship has sailed. We know it's both. We know it's a hybrid model. I'm not a fan of multi-channel, omni-channel. No doubt some consultants had invented that word and have pushed that out into the market. What is really interesting from my perspective, if I look at the evolution of retail and where it's going, we have gone from traditional mom and pop retailing to what I call chain store retailing. So you think back to the sort of 1950s where you saw the large high street names we know today populate high streets around the country. And then we moved into multi-format retailing. So we opened out-of-town stores, we opened travel stores, we opened cash and carries. And then the world splits into two. On the one side, we have the multi-format retailers on the legacy retail branch evolve into multi-channel, so build a parallel online operation alongside their physical operation, realize after a couple of years having different prices in different channels, teams that are not integrated doesn't really work, and then move into omnichannel, which is, in a very simplistically put way, single view of customer at the top, single view of stock at the bottom from a back office perspective, and integrating all of the different brand touch points in a seamless way. But in parallel to that, if I look at the other branch of retail evolution, you had pure players, direct transactional websites and marketplaces. They're increasingly evolving into platform business models. The big question for me is, where does omnichannel go next? And the reality is nobody has achieved full omnichannel yet, but platform businesses are increasingly winning. Their single biggest challenge is the regulator going forward. What we are clear about, though, is that it has to be a hybrid business model of physical versus digital pulled together. And what is interesting, if you look at China, and China is 10 years ahead to where the UK is today from a retail perspective, and you look at the top 10 retailers in China, 7 of those retailers are either owned or have a significant JV investment of one of the technology businesses, and that's where I do believe the market is going.
That's interesting, and the question is, that means that going back to your point of needing a lot more interest in technology, no one's going to try and do a joint venture with Amazon now anywhere else, but what you're saying is that large retailers with the opportunity to invest should look very, very seriously at interesting technological players, because they're not going to make it on their own anymore.
Yes, exactly. I mean, look, I wrote a piece which was picked up in the media a couple of weeks ago, and I appreciate this is sort of somewhat provocative, but I predict, and pre-COVID I thought the date would be around 2030. Now, in a post-lockdown world, I would bring that forward, as we've seen a lot of these trends accelerated to 2027. I think by 2027, the word retail will go. It will become obsolete, and we'll move into the world what I call consumer commerce. The reason I call it consumer commerce, as more and more competitors of the traditional legacy retailers that offer products and services to the consumer are technology, data, supply chain and logistics businesses. And I think there'll be 6 types of businesses, maybe 7, that will win in the future. The first group are the platform ecosystems, as I just alluded to. The second group will be the large multinational retailers that increasingly will transform themselves into platform ecosystems. We have a number of businesses around the world, like Walmart, like IKEA, that have already understood that they're transforming themselves into these ecosystems. The third group will be the domestic heroes. We have many of those in countries around the world, real strong local players, but they will have to reinvent the partnership model of the buying groups of the 1980s. They were originally set up to source own label products as cheap as possible, but going forward, I think they could be used to combine buying power to compete against group 1 and 2, but also to really combine investment in innovation, in talent development, etc. You think of the amount of store of the future projects that are underway in lots of little retail silos around the world. If 5 of the biggest domestic heroes across Europe in non-geography competing ways could collaborate on that, that could be a real game changer. Now, I do appreciate regulators, competition authorities will have to have a say about that, but that's a real opportunity. The fourth group are the value-based players, so the discounters. They are due a more efficient operating model. They have a longer runway. They've generally been more profitable, and in economic uncertain times, that type of business model will always win. If I go back to the 1st of January 2009, Aldi and Lidl had a 3.7% market share in the UK. It's 15.5% today. I think it will be 25% by the end of 2023. The fifth group will be the brands, and more brands will go direct to consumer, either by building their own e-commerce proposition or using the first group, who are increasingly offering platform as a service, but they will bypass the retailer to keep that margin in-house. The sixth group will be the real category specialist businesses that in many cases have a 2% or less market share in the specific category, but really understand the products, the services, and their consumers. Think pet care, think hobby wear, arts and crafting, etc. We've got some great sort of mid-market players in that space. And the seventh group, which is a real sort of emergence from the current sort of COVID environment, and lots of people will say everything has been bad for retail. No, there have been some, albeit a few, positive developments, specifically local and independent players. They have performed very well. If you think at the UK data, outside of the online channel, which has been the fastest growing, we've seen local convenience stores, for example, heavily benefit from individuals not going to inner cities to work. They have been shopping more locally. So there's a real opportunity for local players to benefit from that local traffic. Specifically, if we take into account tertiary high streets have been declining for the last 10 years, there is an opportunity to reverse that.
Yeah, that's a pretty impressive breakdown. I think we only need 5 seconds to digest. I think the point that you were saying about people investing in technology, and one of the things that comes to mind is all of the different companies that are trying to make sizing tools so that there are fewer returns. And there are so many siloed projects that I've seen, different brands with different sizing software or 3D or what. And that's something that if just a few people group together, that would make a step change in that particular thing, which has so many operational and logistical constraints out of it. One thing that we were looking at when Nathan and I were considering bringing this episode together was purpose-led brands. And as consumers look to shift their purchasing habits towards purpose-led brands, do you think all retailers need to start revisiting their values with the seismic changes we're seeing and the things that you just outlined? You also said that environmental social responsibility now can't be off the table. That's what you said. It's now a top 3 board priority. So does that mean that everybody now starts to need to revisit their values of their brand and their proposition?
Look, absolutely. I am fundamentally convinced that this will remain a key topic. The purpose-led agenda is only going to increase in size and in noise over the next sort of months and years. And
not just
brands,
in this time of cost cutting and the time of crisis, it's not a luxury.
It's not, and this is going to be the interesting balancing act. But that's what you do see if you look at some of the value-based players. And yes, we've had a number of sort of scandals in that context, but increasingly the value-based players understand that this is a key driver of consumption. And when I look at the 6 key drivers of consumption that consumers use to make their decision on a purchase, I would put purpose up there as one of those key drivers. And what's really interesting, when we look at research into this context, a lot of cynics will always say, well, how many consumers will say this and actually do it? And yes, they have a point that in countries like the UK, pre-COVID, only 10% of consumers would then actually follow through with basing that purchase decision on what they said, as in, does this brand basically match my values, my key principles? But that 10% does sound low, but it's growing by about 20 to 30% per annum. And if you roll the video forwards and you look 5 years ahead, suddenly a third of all consumers, if not a half of all consumers, and they are all age groups. So this is not just millennials, Generation Z, all age groups are increasingly looking to understand, do my values match the values of businesses that are sharing the same values? And what will be really interesting, businesses that would have been deemed to have been sort of proverbially in inverted commas on the naughty step during COVID, there will be a time of reckoning for those businesses in a post-COVID world.
So, Paul, the question I've got is that a lot of businesses, as we come out of lockdown or started to come out of lockdown, a lot of e-commerce businesses thought that sales would maybe slow, right? And you return to bricks and mortar. But we've actually seen quite the opposite. And I was seeing the Kingfisher Group yesterday have announced kind of boosted profits within the e-com space, and more people are seeing people are just staying with e-com. How does that look for kind of bricks and mortar going forward? Do you think there'll always be a place for bricks and mortar, or as you touched on earlier, do we need to shrink kind of square footage and move more and more towards the e-commerce model?
Yeah, Nathan, look, again, just to build on sort of what I was saying a little earlier. I mean, we obviously saw on the 15th of June when shops reopened in England, and then if we look at Scotland, literally in the last sort of couple of days, we saw an initial surge of pent-up demand in the physical space. But it is fair to say, due to some of the very stringent messaging we have received over recent months, a large proportion of consumers are still very nervous of going to the physical environment. So it will take well and truly into 2022 until we recover in some of the categories, specifically those non-food categories I referenced earlier. So it will mean that online will continue growing. And what was really quite interesting, if I look pre-COVID, the UK had about a 20% online penetration, and we had seen online grow double digit for a whole host of years now. It was the fastest growing channel for the best part of the last 10 years. But come sort of August 2018, we saw that growth to start to slow down. And last year in the final quarter, excluding sort of the Black Friday the Black Friday surge, online had actually reduced to a 3.5% growth ratio. And for 2020, our pre-COVID forecast was about 4% growth due to a level of saturation and maturity in the UK market. But we've now seen, of course, due to COVID, we've seen these growth ratios drop significantly, and KPMG, together with the BRC, produces the monthly retail sales monitor. So we have a very, very good view on actual sales data from about 70% of the UK retail market. And in May, we saw a non-food penetration of over 60%, which is the highest we've ever seen in the UK. But if we roll the video forward and we look at 2021, we do think online will continue to grow at about 7%. So that is close to double the growth ratio we predicted. And then we take a market like China as a proxy, which stood at 28% penetration pre-COVID, the highest penetrated market globally from an online perspective. They saw medium penetration levels at about 65% in January, February, at the height of the pandemic in China. That has now gone back to about 50%, but you can see a significant acceleration of online. But stores will still have a place going forward. There'll need to be fewer stores, there'll need to be better stores, but the role of the store is the bridge between the online and the offline world. That is absolutely key going forward.
Yeah, thank you very much for that, Paul. One of the questions that Nathan and I have looked at a lot during Engage with E-commerce is how small and medium-sized companies that we work with grapple with digital marketing. And what we see as a universal is that a lot of companies up to, let's say, the 40, 50 million size have a hard time really understanding analytics, really understanding the tools at their disposal and really getting the most at it. And I'm wondering, at your work with KPMG, where you're seeking to improve your operating performance across a range of different areas, to what extent in these larger companies are people able really to manage digital marketing operations without outsourcing everything? Because it seems like there's such a range of specialities that are needed. Is it something that companies can still manage to do in-house?
Look, it depends is the very sort of easy answer in that context. I mean, at KPMG, we work with some of the largest businesses in the world, but it is also important to highlight that we have a very strong position in the mid-market, and we do work with businesses of the sort of 40, 50 million size. But what is key to say in that context, and I mentioned the business model and partnership piece earlier, and if you go back and you think of the retail value chain of source, ship, sell, and I highlighted it's become a lot more complicated. You need to have digital marketing capabilities, customer analytics capabilities. You do need to think about which of those capabilities do I want to vertically integrate, as in bring into house, versus which capabilities do I want to work with a partner with. And that could mean, in some cases, dancing with the devil, in inverted commas, and working with some of the perceived large platform competitors who will offer analytics as a service. Now, it always depends on the type of contractual agreement you have in place, and I spend a lot of my time in my day job reviewing some of those partnerships, and I've seen a lot of horror stories where the retailers have handed over the crown jewels to the partners they work with. And in other cases, you may want to build those capabilities in-house, but it really depends. There is no one-size-fits-all answer here. But what is key is having that capability either in-house or not in-house. The amount of work I do with the retail sector to really understand true product profitability, true customer profitability, and there is a complete lack of understanding in that. What is really interesting, it's an eternal debate I have with CFOs, the days of channel profitability, sales per square foot, profit per square meter, they're increasingly coming to an end. We're going to have to understand customer profitability, these type of things, and you can only get to that if you have good levels of data and good analytical capabilities in-house or external.
Well, with adversity comes opportunity, right? And while the last 4 months has seen some less fortunate businesses, it's also seen some businesses win. Heloise and I are both very fortunate that we operate in the digital space, and therefore we've been able to see some growth with some of our clients. In your experience and from the reports you're looking at, who have been the real biggest winners and losers within this kind of previous 4-month period?
It's a great question, Nathan. And again, it is heavily varied. As you very rightly say, adversity breeds opportunity. And if I also go back to some of the points I made right at the beginning of our conversation, we have seen certain categories in retailing benefit heavily. And if I look at some of the data that we are seeing in the June data, we saw grocery sales increase by about 9%. We saw homeware sales, we saw furniture sales, we saw DIY sales increase significantly. The fastest growing category in June was actually computing, growing at over 50%. But, and this is the beauty of the retail industry, and as I mentioned, I've had the privilege to work in this industry and now advise this industry for many, many years, you have winners and losers in the same categories, and it's those businesses that have really understood to move with the time, to change quickly. Those are the businesses, big and small, because we're seeing some really great large-scale businesses really adapt to change, and some small, nimble businesses also doing that. So sadly, there is not just a one-size-fits-all rule here. And even in some of the categories that are most challenged, and I referenced menswear, womenswear, footwear, and specifically the beauty side of the health and beauty category as categories that are very challenged, we're also seeing businesses that are performing very well in that space because of what is key. And if you read the media, you could partially believe that retail is coming to an end. That is not the case. We still spend £390 billion, £395 billion, and yes, we'll see a decrease in that this year, but there still is a significant spend on retail and retail-related services. But businesses, and this is the key point I'm making, businesses have to reinvent themselves. The business model of the 90s and noughties just doesn't work anymore and will not lead to success.
It's easy to say, but it's hard to turn the battleship around, as we know. And I think that's where businesses need a lot of help and good advisory at the moment to at least make sense of their options, I should think. Turning this around and coming from the consumer perspective, everyone wants to shop online. People may or may not be venturing back into the stores at the moment. How do you think consumer habits, from the point of view of the pointy end of where people are buying and how they're buying and what they want? We've seen they have values-led purchasing is going to be really big. What other consumer habits do you think have changed or will be changing in the months ahead?
Yeah, it's a great question. And look, I referenced earlier the 6 drivers of consumption. And at KPMG, we've just recently launched our monthly consumer pulse survey. myself and colleagues from around the world, we wanted to understand what type of consumer behaviours had changed and we will potentially revert back to in a post-lockdown world. So we undertook some research across 12 different markets. That was really key for us to understand, are there different nuances if we look at China versus the UK versus Germany, the US, Brazil, etc. And in that context, it also allowed us to look at different maturity levels of where the virus is at this point in time and how that is impacting consumer behavior. But we also wanted to look broader than retail, and we wanted to look at banking, and we wanted to look at insurance. So if any listeners have not seen this report, you can go to kpmg.com, you can download it for free. It's really a good read. And the 6 key drivers of consumption in retail, I mean, number one is value. That has been highlighted across the world as the most important consumer driver going forward. Specifically, if we embark on economically uncertain times, price will be king, and that will be really key. And we have seen in the past discount value driven retail businesses really benefit from that, which will lead to some of the mid-market retail businesses having to seriously consider their business model. The second key point is convenience, and convenience really falls into 2 key components. Number one is online. We've spoken about the acceleration of online, which of course is the utmost convenience. But the other really interesting point I referenced is also that local dimension of convenience. So shopping locally on your local high street because of you don't want to travel. But what we've also found, which was really interesting, and consumers across multiple countries told us this, that they're also looking at locally sourced products. They're nervous about certain countries of origin. They're also nervous about products going through multiple hands in the supply chain. So they want to know it's come from comparatively close by, which if you are a global brand may have implications on your sourcing, but also on your brand strategy, the same if you're a retailer. The third key point is experience, which is really interesting because I've always been quite cynical about the experience point. As many commentators have highlighted, it's the salvation of physical retail, which I've never believed, because I think putting a coffee bar in the middle of your store doesn't mean that's an experience. If you're in the premium space, the food halls with some of the premium department stores, absolutely. We will have to see when we sort of get back to international visitors and those department stores really driving footfall again. But I do think that has a space. But really interesting, this is what consumers are telling us, and this goes to the sort of omnichannel point we referenced earlier. Experience is pivoting to ease. Consumers want it to be easy, simple, a seamlessly integrated approach to doing things, which is really key. And if I think specifically at the mid-market, who have used experience to try and compete against price, that is not going to work going forward. And in that context, I do believe business models are going to have to be addressed. But what's also interesting is many commentators have highlighted online is transactional. There is no experience connected with online. Now, you don't need to look far. Go to China, go to South Korea, look at social commerce, look at live streaming, how during the height of the pandemic, even in grocery categories where fresh produce, where meat and fish products were brought to life via the online channel. So I think there's a great opportunity if you think of Instagram, Facebook commerce, how that has taken off in some of the non-food categories. I do think, and I don't agree that everything is replicable from markets in Asia to the UK or to some other Western European markets, but some of these points will come and will stick going forward. And then if I look at the final sort of 3 drivers of consumption, we've spoken about choice and the range rationalization. I was privileged to be asked by a number of the crisis response teams hosted by the government and some of the trade bodies to give my input at the beginning of the crisis. And one of the large UK multiples highlighted that pre-COVID, they had 16 different pack sizes of milk. they now only have 2 pack sizes. It's made things from an operational perspective an awful lot easier and goes towards that range reduction. Speaking to a lot of manufacturers, 17 different pack sizes of toilet paper. We all know what happened with toilet paper during the first weeks, if you look at all of the pictures that were posted in the media. So there's a real opportunity around choice here. And then the 5th and 6th points, the 5th point is all around purpose. We've touched on purpose, which is a key driver, and that will be here to stay. I can only re-emphasize that. And the 6th point, I think, is a really big point, and we spoke about in the 2010s online versus offline. That ship has sailed. The 2020s is going to be privacy versus convenience. Will I trust an organization to a degree to hand over more of my personal details to get higher degrees of convenience, specifically in the online space? So can those organizations safeguard my privacy will be a really key question. But what's also come to the forefront is safety, not just safety of data, but also safety in the physical environment. Dear retailer, dear brand, am I safe in your store? If you think of the debate currently raging about face masks in store and in which stores do you have to and which stores don't you have to, but also, are your employees safe in store, in the supply chain, in head office, etc.? So those drivers of consumption, and most of those are not new, but they have all become, or they've all been given a slightly new nuance in light of a post-COVID lockdown world.
Paul, the most extraordinary 43 minutes. I really, really appreciate your time. Just a little bit of time for one more question each, Heloise. If you'd like to go again, or if you'd like to have a question, then please go for it. And then Paul, then we'll look to wrap up, as I'm conscious you're a busy, busy guy. So Heloise, any other questions from yourself?
We know that there's a lot of predictions of recession and downturn. Even if there are winners and both losers in the online space and in the physical space, if you said there's a lot of talk about economic contraction, where do you think the most sustainable growth is we're going to see, specifically in the UK for the end of this year? We need what's your assessment on that?
The next months are going to be difficult. We released the June retail sales data last week. It saw growth, and not just growth on the previous month, which of course would have been easier. We saw a 3.4% like-for-like growth in comparison to June 2019, and we do believe that will continue over the course of July and August. So we'll see a mini V shape from a performance perspective for UK retailing. But September, this is where some of the concerns start with the unwinding of furlough. We'll see a growth in unemployment numbers, and then we of course move into the final quarter of the year, which being the golden quarter is so important for many retail businesses. And depending on the economic mood music, which I do believe will be challenging, this could be a very difficult quarter for the retail sector. I do predict that food will continue to prosper. If you think of 42% of all food in the UK is consumed in the out-of-home market, and large parts of that out-of-home market are still not trading. More people are still consuming food at home, so there is definitely an opportunity in that space. But then I do also believe in businesses across all categories that truly understand which products and which services their customers really want. They will deliver good data. And as I said earlier, I've seen across all categories, I have seen some businesses absolutely win in categories that have posted 30, 40% declines, but there have been players that have absolutely smashed it out of the park. But other players, specifically those that have been more change resistant, have sadly not been able to really pick up any of that opportunity.
So Paul, a couple of the points you raised today, you mentioned about some KPMG reports that you've been creating, and I'll make sure to speak to your team so that we can share those out on the socials when this goes out as well. The final thing for me is, if you're a retailer listening today, what are the 3 things that you should be implementing from this very moment to try and ensure the stability and security of your store ongoing?
Now that is a good question, and you're going to have to allow me to think about the answer to that. But I do agree. I mean, look, there's so many things happening in the market at the moment, and that's why when we speak about the 4 key themes, the business model, the cost of doing business, the purpose, and the customer agenda, I think those have to be the 4 priorities. I appreciate there are some sub-themes sitting sort of below that. I have a slide, and I'm very happy to share with retailers. I've probably spoken to 200 boards of retailers over the last sort of couple of months in multiple countries around what are the key questions that you should be asking yourself in the next couple of weeks. I don't claim to have all of the answers. In some cases, I don't have the answers. It's a very fluid situation, but due to my very privileged position of speaking with many, many retail leaders from around the world, there are some answers in some parts of the world that businesses are already embracing, and I'm very happy to share those ideas, such as how many stores do you need in the future? What's the range you need, and which products in your range are at a true profitable level? We often find a lot of retailers carry a range that is to a large degree not profitable for them. It is at a gross margin level, but as we know, gross margin is a flawed metric around retailer profitability. There is, what is my e-commerce proposition going forward? If I haven't got one, I need to think quickly about what it is. If I have got one, I need to understand exactly how I make it profitable or more profitable, as in many cases it is not at the moment. So there are multiple questions, but I would highlight those 4 key themes as those that retail leaders should have at the top of their agenda.
Well, it's one of those things, I just never want this conversation to end, but I can't thank you enough for joining us today. I appreciate how busy you are, hugely humbled for you to come on our show and to kind of close Engage with E-commerce with a bang. So a massive, massive thank you. Thank you to all those that have listened and supported throughout the series. We hope you've all found it useful, and we'll be sure to get those details from Paul and make sure we circulate them. So thanks again. Look after yourselves, and best of luck for the final quarter. Thanks again.
Thank you both for having me.